Welcome to the Sandwich Generation podcast, a resource for adults balancing the dual responsibilities of raising children and caring for aging parents. Whether you're helping your parents downsize, explore real estate options, navigating caregiving, or looking for practical advice to help your family thrive, this is the place for you. Join us as we bring you expert insights, heartfelt stories, and actionable items to support you and your family within this unique generation.
I like how we all drink our coffee and get all, while that intro's playing.
One more sip. Yep.
Yeah. Hi. How's everybody?
Good morning.
Good morning. I'm great. I was just telling you, Lisa, I didn't get home till after 10 o'clock last night because of travel baseball again.
Yeah. Would you like to a soapbox rant on travel ball?
Yeah.
That could be that could be a week long worth of podcast posts every day.
For sure. For sure. Yeah.
Rock, do you have children? And if so, are they in travel sports?
No, we have pets and they might as well be. I have
they might as well be children or they might as well be in travel sports.
Yeah.
Both.
I have a dog that's the running joke is she's happy, friendly, and energetic because when we take her to puppy daycare, that's the reports that come back. And sometimes the reports have been she's been too happy, friendly, and energetic. And I go back what do you want me to do with that? You want me to ground her? You want me to sit down with her? So
you get a timeout.
You get a timeout. And we do a lot of agility things, mostly for our benefit, just to try to wear her out. And she loves it. So
what kind of dog is she?
She's called a rattle dog, which we didn't know. She's part poodle, fox terrier, rat terrier. And if you saw her, you'd be surprised. She's golden retriever. She is 33 pounds of energy.
Wow.
And she loves everybody. She is sure that everybody is in the world for her, which is such a great thing. I wish we had and so.
Well, since you have the mic, we'll let you go ahead and introduce yourself. We just kind of started talking about sports and pets, but tell us about yourself.
Yeah, well, thank you. So my name is Rock Planck. You can see it on the screen. I'm a reverse mortgage specialist with Cross Country Mortgage. I also happen to be a CMB, which is a certified mortgage banker designation. It's the highest designation you can have in our industry. I'm one of those people that have been doing this for a long time. I'm 37 years in financial services. And so for about the last 7, I've concentrated more on the senior community, baby boomers and older. And a lot of that's because I'm a tail end baby boomer. It's who my friends are. It's who my peers are, my family. So it's what I do. I'm excited about it. It's also something that not a lot of people do. And so I've always tried to find those niches because there's people that need to be in those niches. And I'm a masochist, so I like
You're a masochist? Is that what you said?
Yeah, so there's so much education that has to go on with this. And then, you get that, I'm sure we'll talk about it. It's that perception about reverse mortgages. And so if you ever want to have people leave you alone at a party, say that you do reverse mortgages, I guarantee to have plenty of alone time. So.
Oh, that's nice.
That's funny. Well, yeah, that's, I think there is a lot of misconceptions about it. So I think we really just would love to hear from you and what even is a reverse mortgage, and
is it even called that anymore?
Is that still what it's called?
And it's funny that you asked that question, Lisa, because there's a group of people who do reverse mortgages, and I use the air quotes because some people, their company might allow them to do reverse mortgages, but they really don't, right? It's something else that they do in addition to all the other lending. And
it's just a tool in their toolbox kind of thing.
Yeah, they don't really understand it. And it's, it's like trying to pretend I could fix my car and I can't really do anything more than put oil or windshield fluid in it, but I'm a mechanic, right? So for a while, there was a growing trend where we're going to call it anything other than a reverse mortgage. We'll call it retirement mortgage. We'll call it HECM, which is home equity conversion mortgage, which is FHA's term. I will say sometimes I call it an adult mortgage, which I think is more accurate. The problem if you start to call it and pretend that it's anything else is when you get to the documents, it's reverse mortgages on it. And I'd rather just call it what it is right from the beginning. I'll call it an adult mortgage because what I do love about this program is you get to a certain age, and then you get to make choices. And that's probably one of the most confusing things about this loan program.
Tell us what a reverse mortgage is. And I said, is that
what even is
do we call it?
Yeah. So what is a reverse mortgage? A lot of people like to call it different things. I think the best thing is just to call it what it is, a reverse mortgage. There's a growing trend for people to call it a retirement mortgage or something else, which I think is okay. But when you get to the documents, which are typically FHA documents, it says reverse mortgage. So let's just call it what it is, a reverse mortgage.
Oh, yeah.
Yeah. And so, this simple explanation for what it is, the most common use is a refinance. And so if you think of your home much like this Yeti cup, all we're doing is people have a certain amount of equity that they can access. They put a spigot on it to have access to it. And how they want to use it is really up to them. We can, since it's a spigot, you can turn it on and have monthly distributions to yourself. If you need a splash, you turn it on more. If you don't need it right now, you turn it off. And so it gives people access to their home equity. And that confuses people because they get access to something they're not having access to, and they want to make it more complicated than what it is. It's not any more complicated than that. And so, but that's what it is.
So how is it different than like a traditional HELOC, a home equity line of credit? Is it the same, or how is it different?
There are some similarities. A lot of times I will call a reverse mortgage a HELOC on steroids. So with a HELOC, there are a lot of people that will recommend seniors get a HELOC in retirement. Sometimes it's for a rainy day, crap happens, maybe, because then they have access to that line of credit. So home equity conversion mortgage, a reverse mortgage will operate the same way. Except what happens then with a HELOC is immediately when you start using it, you're going to have to pay back. You have a requirement, right? It's interest only. And then at some point, you'll have a period which you can draw funds from. But at some point, you won't be able to draw anymore. And then not only do you have to pay back the interest, you have to start paying back the rest. And so when you think about this age group, if something has happened, let's say it's death of a spouse, you need access to that. Well, now you're compounding injury upon injury is they have a required payment that's this small. And at some point, it's going to become this big.
On a HELOC.
On a HELOC. And that's going to be the wrong time. So with a reverse mortgage, there's no required payment. It's completely optional. And so you've got this line of credit you can draw from. So if you need to, if you've set it up like a HELOC for emergency purposes, you don't have that injury upon injury by having a required payment. And there's no term. A HELOC has a term. Heckam, the term's ambiguous, right? It's so you sell the home. It's not until the last person leaves the home. Or here's something funny. It's not until the last person turns 150 years old. And so you don't have that with HELOC. Yeah, no. And here's the stupid thing about that.
That might be challenging.
Yeah. Well, so
no, we're living longer.
We're living longer. And it's funny, Lisa, someone during COVID went into to the HUD office, and they now have a rider. They'll extend it another 20 years. And so she's 150 years old. So with a HELOC, you're going to have a payment immediately. It's going to have a payment that's going to increase. It's only going to be for a certain period of time. And it's always a set amount. So I like round numbers. So let's say it's a $100,000 HELOC. And it's always a $100,000 HELOC. With a reverse mortgage, if you have a $100,000 line of credit, whatever you don't use will grow at the same rate for money you do use. I tell people it's like having a Macy's credit card, and they keep raising your credit limit. So that's really nice for people in this age group. Let's say they're 62, they don't need it right now, but they've set it up for the future, maybe for long-term care. Well, if they're 62, it's a $100,000 line of credit. Maybe by the time they're 72, now it's a $200,000 line of credit. By the time they're 82, it might be a $300,000 line of credit. So they have growing access. And that's
so that
when
reverse mortgage can grow then.
Can grow. And that confuses people. Yeah, and it's whatever the prevailing rate is. It's a different program. I have somebody in Kentucky that did this to give wealth to their kids now. And when interest rates went up, their line of credit expanded. They actually like the interest rates went up. It's like
the opposite of what everyone else.
That's a reverse way of thinking. Yeah. So, so the other thing with the HELOCs before we move on is, and this happened during COVID, if you have a HELOC, banks can call them due. And that's a lot of people. And in this age group, that's the last thing you want to take away is access to, their home equity. If we use the Yeti Cup kind of as an example, you don't want to take away that access. With the reverse mortgage, that access continues. So,
sure.
Okay.
Yeah. Does that help?
Yeah. So you called the reverse mortgage a reverse mortgage. You've called it an adult loan, I think, right?
Yeah.
And did you call it a HECM?
Yeah, HECM is FHA. Most reverse mortgages are FHA mortgages, and so home equity conversion mortgage is HECM.
It's the same as a reverse mortgage. Yes.
And
I'm only saying that for when we use acronyms in this industry. I try to not use acronyms, especially if I'm talking to a client or, the public, just because we get so in our own industry, it's the same. Yeah. It's just a little quirk of mine, especially in the education industry. They do that a lot. Sure. I'm like, what is whatever. But I had a thought as you were talking for the engineers who may be watching or listening to this. Tell us how the actuarial science works. And I hope I'm not I hope I'm not catching you off guard with that. We talked about not catching you off guard with our question.
Fire away.
We're taught if it sounds too good to be true, it's usually too good to be true.
Sure.
And so how does the back end of the actuarial science work for, again, those engineer types who really want to? We actually had a client, by the way, make a Monte Carlo simulation to decide where they were going to move to. So we have those types of people within our sort of, database or, and so tell us if you're thinking, if you've got a mind like that, how does it work behind this?
Well, I'm going to work backwards on that. If they're an engineer type, oh my gosh, I would be in heaven, because now we get to look at spreadsheets and models, and we can, that's
down with the spreadsheets and models.
Yeah. I love that.
I liked you for a reason, Rock. I like the spreadsheets too.
Well, because then you can see it. And sometimes it's easier to see it when there's a model. I always create a model for my clients. I also do videos, which sucks for them because they have to look at me. But what's nice about that is they can see the model. And then what's also nice about that is when they're talking to their family or their advisors, they can share that model and it's the same message. And so rather than play that old telephone game we played as kids. And so I like building the models for them. From an actuarial standpoint, that comes up quite a bit. These things are age-based. And so if you just want to, not to be morbid, but we think about death, the expectation is someone who is 62 is going to live longer than somebody that's 92. And so what FHA doesn't want is for someone to use up all their equity or to be upside down. So someone who is 62 can't borrow as much as 92. Because typically they're not going to make a payment. They have an option to make a payment, but typically they don't. And you have to allow for that balance to grow. And usually that's offset by home appreciation. Well, if you let someone who is 62 borrow as much as 92 and they live 40 years, which is not unusual anymore.
And they spend all that money they borrowed.
And it's not designed to take away their equity. So there are some preventions. So when you get into actuarial if we just say, hey, if you think about this as life insurance, life insurance for somebody at 32 is less expensive than somebody at 42 or 62.
Sure.
So there's a lot of similarities between those.
So you've mentioned 62 a couple of times. Is that the required age? Like who qualifies for a reverse mortgage?
Yeah. So it depends on the state. It's a good question, Sarah. The most common loan is the reverse mortgage offered by FHA. And the minimum age requirement is 62 or married to someone 62. Mm-hmm. So in educational classes that I use, I'll talk about, I'll show a picture of Catherine Zeta-Jones and Michael Douglas. There's that age.
That's funny.
You can have a younger spouse on a reverse mortgage as long as the older spouse is 62 or older.
Sure.
In Texas, in Texas, they both have to be 62. In other states other than Indiana, there are some proprietary programs, some non-FHA. You can be 55. But probably, if I were to throw out a percentage, just use it as a ballpark, probably 95, 96% of all reverse mortgages are the FHA program, and you have to be 62 or older.
Well, that's a good segue, because you've mentioned that the reverse mortgage is an FHA product, and there are some people feel like an FHA product is less than, for lack of a better word, less than a conventional product. What do you say to that? And also, I had no idea that there were proprietary products out there that were not FHA.
Yeah. So yes, in the proprietary programs, typically they have higher minimum loan amounts. So in Indiana, as much as we might not like where our property values are, they're still below, let's say, California. Like I've got a deal one in California. It's $1.2 million home. If you saw it, it's in Indiana. It's definitely not $1.2 million home. So we don't, basically in Indiana, you're stuck with the 62 program. And so, what was the other question? As far as
the FHA versus proprietary, and then also just how some people, FHA kind of doesn't have the best reputation with some people just because they feel like it's less than a conventional product.
Yeah. So then sometimes I call it an adult mortgage, and the reason I call it an adult mortgage is we get to a certain age. As I get older, I want more options. I think I deserve more options, and so the options that you have with a reverse mortgage far exceed anything with a conventional loan. So you have a completely optional payment other than taxes and insurance. You get to decide when you pay it back, right? You're going to pay it back when you sell the home. You're going to pay, you don't have to pay it back till you're 150 years old. If you pass away and your kids take over, they've got 1 year. You've got all these great features. In addition to that, I've mentioned it's a completely optional payment. If you want to make a payment, great. And if you make a payment, we'll let you take it back. Try doing that on your car loan or your 30-year fixed rate mortgage. You call up and say, I've been paying an extra $100 a month.
Oops.
And I want to go on vacation. Will you give me that back? And they're going to be nice to you. They really are, but they're going to laugh when they hang up the phone. With the reverse mortgage, should you make a payment or you have access to equity, you can get it in 3 to 5 business days. So I call it an adult mortgage because you've got all these great features that you wouldn't have with a conventional loan. Conventional loan says, you owe this amount of money. We don't care if something happened next month, you owe this kind of money. And we don't care if you paid extra next month, you owe this kind of money. So FHA has done quite a bit with this program. It's a pretty robust program. It's like a privilege to have it. And we have people now that are looking at it in retirement when they're purchasing a home and they're using it instead of a 30-year fixed rate mortgage. Because what it does is in this age group, we talk about death. So let's say that, sorry, Sarah, we're going to pretend that you and I are married, but let's say that we do this. I know, right? So what happens then is she doesn't have to worry if she dies before me, leaving me with a payment or vice versa.
Yeah.
And you have that with a 30-year fixed rate mortgage. So let's say she and I, we bought a house, we used the reverse mortgage for that house, we make a payment, and we decide, or one of us passes, we can stop. 30-year fixed rate mortgage, there's a payment due. Sorry that your spouse died. So I think FHA has done a lot to give it significantly more advantages than a conventional loan. You just have to get to where people want to hear it.
So that made me think of another question. So if, because you mentioned that one of the owners needs to be 62. So let's say my husband is 62. We have a reverse mortgage. I'm not. He passes away unexpectedly. Mm-hmm. What would happen to that mortgage? Is there a way to keep it going, even though that the other spouse is not 62? Mm-hmm. What would happen in that situation?
So, like Lisa had brought up some things. In the past, it was a little bit harder for you in that situation to maintain the house. Now you are protected. So in that situation, situation where you are what we call a non-borrowing spouse, someone that was younger than 62, you're free to live in that house until you turn 150 years old, till you pass away, till you leave it. So you are protected. If there were money,
she could still use that equity or no?
Yeah, the only thing that would change was if she had money that could be borrowed when her husband was alive and she's younger than 62, she would not be able to borrow that money anymore. So,
okay. But she just doesn't have to pay back the reverse. Okay.
Correct. And so what we tell people is if you happen to know, it can be called the ruthless option. So you happen to know in this case, Sarah, that your husband's going to be passing away and there's money you could take from the line, then you should do that before he passes away.
Mm.
Now, if you both were 62 when you got the mortgage, then it doesn't matter. But if you were young, but other than that, you are free to stay in that house until you're no longer in the house and you do not have to pay it. Yeah. FHA has done quite a bit to protect the younger spouses in those situations.
Nice.
Yeah. It sounds like it. So let's talk about some of the fun stuff that you could do with the equity when you do a reverse mortgage. Fun or not, I mean, not necessarily fun, but like when we talk about home ownership and specifically the reverse mortgage, it's a financial tool to use. So what could we use the reverse mortgage for?
Whatever you want.
So we'll fun.
We'll talk about the fun stuff. I know someone, and I use his term, he calls them reverse mortgage vacations. So what he's doing now is he is willing to pay for any family vacation. What he's not willing to do is to plan the trip. So if you come back to him and say, hey, I need you to find hotels and cruise lines or airplane flights, he is out. But if you come back and say, hey, we've planned a vacation for July for the family, he will pay for that. His family doesn't need his money, and they're upfront with what they would rather have is that legacy. And so that's one of the
that.
Yeah,
that's good.
It's so cool. Or I've got people in Kentucky. So what they're doing now is they're transferring the wealth each year to their kids. I'm on the receiving end of some of that with my mom. As you can imagine, I handle finances for her. We have this battle between where I tell her I don't want her money, right? I have to be careful when I tell her things I like because I'm likely to get it. And luckily I pick small things. But what I found is I get to share that back with her and I get to while she's alive. And I thought about it. I can honestly say I doubt, and someday I'll unfortunately get to find this out, I won't enjoy that as much when she passes. It's not enough that it's going to change my life when she passes as far as money, but it's nice now that what she's gifting and using, we get to enjoy together.
Yeah, enjoying it together. She gets to see you enjoying it, and that's huge. I mean, people don't even think about that could be, you're gifting them now, and you get to see the fruits of that versus you have no idea.
So we are.
You don't have to wonder, like, this is a real thing, actually. You don't have to wonder, am I spending my mom's legacy how she would have wanted it?
Yeah.
She gets to tell me how she wants it because she goes and she spends it. Yeah. And then I get, whatever this might be.
I really like that. Yeah, that's great. Because it is those memories that they're not tangible. They're more important than the tangible things. Sara and I help people sort and pack through all of their things so that we can get them downsized and moved and clear their house and sell their house. And so many times we have to coach people about the sentimental value of things is not the same as if someone were to purchase it at an auction or an estate sale. So I really like that idea of just leaving a legacy. This is truly a way that somebody could create lifetime memories for their loved ones.
Well, and we're seeing more people that are doing that have found their retirement home, if you will. And so, and right now we know what the real estate market's like. So they're taking some of the equity and they're gifting it to their kids. You have to remember these are adult children, and they're using that to help buy a home, for the down payment. or they're using it. I can't remember the exact number. It's like 70-some% of people my age and older feel it's their obligation to pay for their grandkids' education. Okay, well, why wait until you die to do that? Let's set up different things now. So we're seeing more effective use of their home equity to do it now, and they get to see that. And it's a different way to use a reverse mortgage, and that's some of the fun stuff that I think you're referring to.
Yeah, and so I guess when I said the not so fun stuff, or about there was, aging in place. I think there's a statistic from AARP that says like 90% of seniors want to age in place, which requires some help sometimes as their health declines. Bringing in, like, this is where Sarah's expertise come into play because she has a background in senior care. Bringing in home care, home health into the home, paying family members to be those caregivers. Those are all things that a reverse mortgage could help pay for, right? So
you remind me of an example. One of my favorite clients, she has MS. She's in a wheelchair. Every time I think of her, I smile. She's funny. For instance, her sense of humor is she likes to go to concerts. And part of the reason is, remember, she's in a wheelchair. She always has the best seat in the house. And so
sweet.
Yeah, there's some off-camera stuff I could tell you that you're trying to be professional, taking an application. You're like, could you just sign here while you're trying not to crack up? But what we did with the reverse mortgage, or what she did, was we paid off the mortgage that she had, so she no longer had that required payment. She called it the disability van, so we paid off the vehicle payment, and so she had that freed up cash flow. And then she was taking out money, set it up so she would get monthly distributions. So it was around a $1,500 a month cash flow swing. And then she would pay for home health care to come in and check on her and help her with some of the daily living things she needed, and also to put the dogs out. She lives in the country. She took a little bit of money out to pay for carpet because she wasn't always able in her wheelchair to get the dogs out soon enough. And sometimes there would be messes on that. So it was a big swing in her
wheelchair. Was probably not great on the carpet either.
Yeah, but she is happier and her kids are happier because she has someone else coming in to check on her. It takes that burden off of her kids. It takes that burden off of her to worry about the dogs. I mean, it's that $1,500 swing was quite a bit, and so everyone wins in that kind of a situation.
Yeah, I feel like some home modifications, things like that, if they're, if they've been in their home for a long time and they plan to age in place, you could use that money to, widen some doorways or, change your shower out so that it's easier for you to get in and out. Like just some easy things that would, yeah. I shouldn't say easy.
Yeah, we've had Haley and Sam from At Home Preferred on. They are certified aging in place specialists. And that's what I was thinking too. This would be a great resource for someone who did want to age in place, but their house isn't safe enough, which we talk about a lot. For them to do that, they need to make some modifications. They could bring that in, and that's something that they could use the reverse mortgage for.
Well, the other thing that comes up with that is we have people that it's becoming more common. They're using the reverse mortgage to buy a home. And so I had some other clients in Southern Indiana. I see a lot of my clients because they want to see you. It doesn't matter economic footprint that they have, whether this is the last resort or they're millionaires. And I've had those clients too. They want to see you. And so when I saw them at their home in the country, it's a 2-story home, 3 if you count the basement. It had deferred maintenance. And what they did was they sold that home to a family. No surprise. They bought a new home. And so in a low maintenance community, they put half the money down. The other half went to their financial advisor to set up for long-term care and other needs. And they took a $5,000 trip. And so they used the reverse mortgage to do that. So now they were in a home that was 1 story, better fit them in retirement. It had all the design features that you were talking about, Lisa. It was just a much better fit. And then their biggest thing, and you both have touched upon, is what do you do with all of our stuff? And, but everyone felt better and they were better protected in retirement.
Yeah. Yeah, that's great. Just go ahead.
No, I was going to say, are there certain properties that don't qualify for a reverse mortgage, or is it just anybody that owns a property?
Sure. It has to be your primary residence, but in terms of the type of properties, since most of these, as we've discussed, is an FHA loan, it's the same FHA appraisal you would have for a first-time home buyer. And so you can do, here's some other things. We don't see it that much in Indiana. I'm hoping that'll change. You can also use this for 2 to 4 unit properties. So let's say you've got somebody, my age and older, they want to buy a duplex. Remember, they have no required payment, live in one side, at the other. Now you got cash flow with that. Yeah. And then to somebody that also might also check on you. Again, whether it's a family member or tenant, usually the people that you're going to rent to is someone that's going to keep an eye out on the homeowner. So
this is the kind of strategy that I love, just strategizing like this, especially when it comes to building wealth, protecting assets, and leaving a legacy to your family members. So you could get a reverse mortgage on your property, use it to buy a fourplex. Now you have, and maybe you don't even use all of it, maybe you do, whatever. But so you've got this stream of income coming in on the rental properties. If it's a fourplex, you have 4 rents coming in, plus you're building equity on the actual property itself. Now you've got a stream of income to help pay for you to age in place and have a caregiver come in, whatever, twice a week. You have your home, you're aging in place like you want, and you have investments to that is just, you're just adding on to your wealth and your tools that you have, financial tools.
Yeah, you could either use it to buy the investment property or buy the 2 to 4 unit property as your primary residence and just live in one unit and rent out the others. So, yeah.
It might be go ahead, Rock.
Well, once you realize, and that's the confusing part about this program as compared to some of the conventional programs, you have so many options and so many things you can do. And you talked about it, an engineer in Monte Carlo situations. Okay. Well, let's talk about all your options. That confuses people.
That didn't scare you away.
No, it's a powerful program.
Yeah, I feel like it'd be a good way for the families that we're seeing too. We're hearing more about people wanting to have those multi-generational family living options. So you could do that too for that situation where you've got, a son or daughter living right next door. That's going to help you continue to age in place, but you each have your own spaces, which is nice.
Well, we do see, and it depends on the split within the older generation. If you start to divide it in different tranches, I think we see some people in their retirement where they move because they always wanted better weather, and then they start having grandkids, so then they move back. Right. Older, and then maybe they move again. And then there's also that movement when they become of a certain age and then their kids want them to be closer. And so we're seeing 1 or 2 or 3 moves in that retirement. Sure. I just closed on a reverse for purchase last week. She had moved back to Indiana in a small town. That family member is no longer in that town. And it was 30 minutes outside of Carmel. So what she wanted was to be closer to church, her services, and her book club. So she sold the house there, found a house that was better for her anyways in retirement, was closer to all the other services. And then she didn't need all the money from the first house to buy the second house because we used a reverse mortgage. She's got money left over in the bank. So she's safer. Her kids are happier because she's not driving 30 miles at night in the winter. Everybody kind of wins with that. So there's some really cool things that happen when you use a reverse mortgage that people just don't think about.
Yeah. You've told pieces of several stories while we've been talking, and Sarah and I always talk about how we should write a book with all the stories that we have. And it sounds like you're about the same. Is there a favorite sort of reverse mortgage success story that you can share, obviously, while not giving any private information away?
There are several that come to mind. There are a couple of situations where we helped. These were not the same. It was not the same lady. I have clients that were divorced, and we we used the reverse mortgage to, in this case, it was to pay off the ex-husband. And in one case, I can remember, because I got to deal with him, I could understand why he was an ex-husband. And so
interesting.
Those ladies were so sweet. They would always apologize. And I charge my high maintenance clients, I charge them more. And it's a dozen chocolate chip cookies. And I get cookies. And,
it's like, where are we going with this?
Yeah.
Well, they feel better because then they feel entitled to continue to ask me questions. So those two individuals come to mind. I did, on a purchase, I had somebody who had been in an apartment complex for 15 years. It was just being ignored. She had some health issues, so she was also on Medicaid. And she had a little dog that she loved. And so she had won a wrongful death suit. She had money. And what we did was we worked with her and her attorney to keep the money in his account. We helped her purchase a new place. And the walls were bigger. It was, had been repainted. It was everything she ever wanted. And she also had a little place for her dog. And this was so important to her and her daughter and her family. She eventually passed away, but then, the daughter called me afterwards and was kind of helping her with that transition. I got thanked several times for that. And, we talk about, we get paychecks, but this is beyond a paycheck. It's just, she was such a delight, the client. And that was really important to her, a place for her dog that she did not have at the apartment. And it was bright and sunny. And so those are just a couple. It's a lot of cool things we get to do.
Yeah.
So we want to ask you about some practical tips, because this podcast is for that adult child and its educational nature, obviously. But before we get to that, we're going to play a 37-second commercial. The Sandwich Generation podcast is brought to you by Indie Real Estate Experts. We're a real estate brokerage dedicated to helping seniors and their loved ones downsize with less stress and more support. And we're proud advocates of dignified aging. From sorting and packing to selling and settling in, our team handles every detail so you don't have to. Whether you're helping a family member transition or planning ahead for yourself, we're here to guide you every step of the way. Learn more at downsizingindie.com, where compassion meets real estate. So we wanted to ask about some of your most valuable tips, both for those considering a reverse mortgage as a financial strategy, and for family members who are maybe adult children trying to look out for mom and dad, who might just be skeptics.
Yeah, so there's two parts of that. One, financial advisors more and more are using this as an investment tool, as another tool, because what happens too often, if you've got the income bucket, the asset bucket, and the home equity bucket, income changes in retirement. Typically it goes down. The asset bucket would last longer if they would also use home equity. And too often we come in at the end when they've used up all the assets and say, hey, what about now? So more financial advisors saying, hey, let's use these two buckets and we'll all be better for longer. They can create more wealth, pay less taxes. And advisors can also be in trouble if they're not talking about reverse mortgages. So if you're working or your parents are working with an advisor that's anti-reverse mortgage, that's a red flag. And they need to be talking about home equity. The kids, what I would always recommend, the adult kids, is to make sure that you're talking with someone that understands the product and wants to have you involved in the process. I call these family loans because typically I do have family members involved. I love that because then everyone's on the same page. Come fire away, bring your misconceptions, your myths, bring your concerns. Let's just talk about it. Because then I find once everyone's on that same page and they've analyzed it, then there's greater buy-in. They realize, hey, this is a pretty powerful tool. FHA also requires counseling. And I just tell my clients, it's FHA wanting you to think about what you think about or you're thinking about. The family can be on that. So adult children can be on that. I encourage them to be on that.
Sure.
I can't be on it because they want, again, to have that third party there. So I think if you get them in there and they they listen and they pay attention, keep in mind that it's still the parent's option. And sometimes there are some kids that are anti this, and I'm happy to answer, but I have to remind them, this is not your decision. I'm happy to answer your questions, but this is your mom's decision. You guys work it out, but I'm going to do what your mom would like to do. So, so talk to financial advisors, find financial advisors that are talking about home equity. Seek out reverse mortgage people that are truly specialists in this. They're willing to talk to you, and your life will be easier. Even if you find out it's not the right fit, that's just as important as finding out that it is.
Yeah, sure. That's a good one. Mm-hmm. Yeah. Even if you find out it's not the right fit, it's important to find out if it is or not. Yeah.
Yeah. You would hate to find out that it was an option and you, out of ignorance, or you just didn't know and it's too late. Or then right now, or I've got folks, and I had a couple people I talked to last week. Right now is not the time, but we have a 2 and a 3 to 5 year plan. Okay. Well, now their stress level is much different. They have a plan. It's not a 30-year fixed mortgage that they have currently. They now have a 36-month or a 60-month mortgage. Like, oh, wait, I know in 3 to 5 years, I can get rid of my payment. I can do something else with my money right now. I can plan for long-term care. I can plan for this. I don't have to plan to sink more money in my house and be house rich, cash poor. So it's finding people that are going to help educate them as opposed to selling them would be my advice.
That's great advice. Yeah. So how should people contact you, Rock? I know you're with Cross Country Mortgage, and there's a website, crosscountrymortgage.com. Do you want people to find you that way, or should they call you, email you? What's best?
I'm kind of like Cher, all right, with a name like Rock Planck. It's not too hard to find me.
Yeah, I know, right? That's so funny.
Like a lot of times, I don't even need a last name. Hey, it's Rock.
What were your parents thinking? They had a strategy behind that.
That's the joys of growing up in an Italian community, right? I wasn't the only one there. Yeah, my middle initial's I, so it's rest in peace or RIP. So.
Oh my word! Wow.
So how you can find me is reverserock.com is probably the easiest.
Okay.
Or just Google Rock Planck reverse mortgages. And certainly I would always say that folks can always find me through you guys. You guys are doing such a great job of educating. I love the educational series that you're doing. I love that you're bringing in other experts. I've seen your list, and I know some of those people. They could always get a hold of me through you guys. So.
Okay, for sure. Yeah, and we did not pay you to say that.
No. You guys have a great reputation in the community, and as I said, and we found this out recently, Lisa. Our circles overlap with those common people, and there are some ambassadors that are really trying to change how aging is done. And I get fired up talking to those folks. I see some of those at the McCord events, the SACOA events. If folks are not familiar with that, Central Indiana Council on Aging or Marion County Council on Aging. And so there are some people that want to change how things are done and think they can be better. And you bring some of those people to the table. So thank you for that. You guys are doing a great job.
That's important. Okay, so just one quick last question. When someone does reach out to you, what does that process look like? So we get a lot of people who just sort of want to dip their toe in the downsizing pool or pond, but they're not quite ready for us to come sit at their dining room table and talk about downsizing. So they reach out to you, they fill out your contact form on your website, and then what happens?
Yeah, so it's more of a conversation. It's kind of like what we're doing. It's an interview. It would be, Sara, what are you trying to accomplish? So if we're talking about, even if we're talking about a purchase, what are you trying to accomplish? And so that's kind of what we focus on. Folks in my business are always going to ask about age, and we really want birth dates because we're very sensitive to birth dates. The older you are, the more privileges that you get. Or if you're within the next birth date, we might want to schedule things so they happen, so you fall within 6 months of the next birth date. So I'm going to want to know what you're trying to accomplish. Are we doing a refinance and you need better cash flow? Are you using it for healthcare reasons? Are you using it for gifting? What are your ages? For me, I want to know, where you live so I can look at valuations. It's always great if they have real estate professionals, because then my question is going to be, well, have you talked with Lisa about the value of your home? I'm not a real estate professional. I couldn't do a broker analysis, whatever you want to call it. But if they've come to you and you've said, hey, their house is worth 300, and they've told me, yeah, I'm working with Lisa and Sarah, it's worth 300, I'm going to use that and their birth dates and what they want to accomplish. So age, what are you trying to do? Do you owe anything? That's really the big point. And let's come up with a plan. I also, with this, and you might see this in your business as well. If my clients, if I get told someone's in a hurry and we talk to them today, remember they're in a hurry. I said, well, I'm ready to talk to them. I might not meet with them till next week because they have doctor appointments. They've got grandkids, but they're in a hurry. But it might be next Tuesday when we talk with them in a hurry. I find that you just have to be patient with people. They want to dip their toe in, as you mentioned. They want to get some information. They're going to come back with questions. They talk to someone else and someone else said this. You just have to be patient with them. Yeah. It might take 3 years, but either the concern that they had occurred or they just are now ready. It just takes time. Got to be patient.
Yeah, that's great. Well, we have certainly enjoyed our time with you, Rock, and we appreciate your advocacy also for seniors and their caregivers or adult children. You're doing really good stuff, and we like to partner with people who are doing good stuff for seniors in the community.
Thank you. It's once you start getting into it, it becomes addictive, and it's not what you think. And so being involved with some of the other community groups we talked about, like McCord and Socoa and some of the caregivers around here, you're like, this is not what I thought getting old was about. There's hope here. This is a lot of fun. I've gone to where these older people are out partying. Me, this is not what I thought aging was
70
like.
and 80-year-olds and even older like to party too, just the same, right?
An assisted living place for March Madness. There was bourbon tasting. There was basketball shooting. There was margaritas. I was told I could go if I wanted to work. There was no working there. This was funny. And before you leave, there was somebody who lives in an assisted community that found out has multiple patents who is still working for Eli Lilly, and we are now LinkedIn friends. This is not what I thought retirement was like. So absolutely.
Yeah. There's some super sharp people, and it's so fun that we get to work with them and help them in all the different ways that we do. So it's awesome.
It's pretty great.
Thank you so much.
Yeah. Well, thank you for letting me come on and chat way too much, but thank you.
No, well, just as always, please give us a follow, like, subscribe, and share this with your friends or anyone else that might be helpful. And until next week.